I still remember what my parents used to tell me, that back in their days, a fixed deposit used to give 15%, 16% interest rate. Can you talk about those days where people were getting 15% interest rate on fixed deposit? And
No,
they
but rate of interest doesn't mean anything. If you had visited Mexico in the 80s,
right.
you would have seen the town plastered with billboards, banks advertising fixed deposit schemes offering rates of interest as high as 80%, 80.
What?
Does it sound high?
80% interest rate on
But their
fixed deposit.
inflation was 100%.
Oh.
Interest only makes sense when compared to inflation. The government has to ensure that the real rate of interest is positive. And real rate of interest means the rate of interest that you get less inflation. So when India had 12, 15% interest, the inflation was 10, 12%. So that doesn't mean anything.
Got it. But today it's a little different, right? Today FD is giving 4 to 5% post-tax returns, right? And the inflation for that same people who are in the 30% income bracket is about 10%.
So that is a negative real rate of interest, and that the government has to make sure doesn't last long. That should can happen for a short period of time, but it cannot be sustained. Otherwise, the banking system can collapse.
So you're saying right now, whatever is happening in the country cannot sustain?
Hopefully, should not happen for long, will not happen for long.
And why? What is wrong according to you right now in the country?
Because your real rate of interest is negative. The depositor in a bank will start feeling like an idiot. He says, I saved my money grew by 5%, my prices have grown by 10%, net, I'm a loser.
Correct.
The banking system can collapse.
Correct.
When India pre-1991 had a rate of inflation of about 9.5%, 10%, banks used to give 12%.
Right. Real rate of return was positive.
It has
2%.
to be.
Yeah.
A negative growth rate for about 10 years. Recessionary conditions. I had a colleague of mine who did his chartered accountancy under me, used to work for Goldman Sachs, still works for Goldman Sachs, but was posted in Japan. He was visiting Pune, and when he came to meet me, he says, now when I put money in the bank, they're leaving service charges. They were charging you money. So interest has to be seen in the context of inflation. Now, they've got two tools in their arsenal. Tool number one, monetary policy. Tool number two, fiscal policy.
Okay.
Fiscal policy controls taxes. Monetary policy controls interest rates. Now, one method is you want to reduce demand. You got to make sure the citizen has less money in their pocket to spend, so demand will go down. So they can hike up tax rates.
So that is why the government is increasing taxes.
No. They won't do that. Because if you're trying to please your vote bank, and if you hike up tax rates, your inflation will come down, but your voter will be more convinced not to vote for you. So no sensible government will use that because it hurts the vote bank. Then the next option is use the monetary policy. Then the RBI governor would be asked to, if possible, intervene. And then the RBI governor will say, okay, we have decided to hike up interest rates. Now, when you hike up interest rates, those who deposit money in the bank will earn more. Those who borrow money will pay more. So more people deposit, less people borrow. Money which was floating in the economy goes into the banking sector. When money supply in the economy comes down, inflation comes down.
No, but if the interest rates are increased, which is probably what the RBI will want to do to control the inflation.
If there is, yes.
Right?
But the government may not want that.
Why?
Because that makes money more expensive. Then industry starts suffering. Their growth gets stalled. So employment may suffer. So, right now, the same problem Trump is having with the Fed chief.
Okay.
He gets up and says every day, this guy is not supporting me.
Okay.
He said, I'll sack you, but he can't sack him. So that guy's steadfast in his own approach. He says, no, I will do what the economy deserves. I will not do what you want me to do. So they're on a complete war path right now.
The Fed chief is
Fed chief is equivalent to our governor. Yeah.
He's not required to listen to the president there?
No, nobody is required to.
Okay. But here...
No.
Okay.
I should not name names, but let me not name. The last 3 governors back, that gentleman refused to listen. So they did not extend his term. Then they brought another gentleman who had come from America. He listened to the government for about 3 months and he stopped listening. So he was given marching orders. Then the next guy came. So they are always on a... If the RBI governor is conscientious, there is bound to be conflict with the government.
So if this, let's say, for argument's sake, if this keeps continuing, if the inflation keeps continuing and people's purchasing power keeps dropping, because, 99% of the people in India are not good investors. They're going to do the same old thing, which is keep cash and FDs or some money in the locker. So if that keeps continuing, let's say for 5 years, 6 years, do you foresee that probably the middle class will start shrinking? More and more people will go below the income level?
Cannot continue for so long. Where will the demand come from? See, in inflation, demand is greater than supply.
Right.
For demand, you need to earn enough.
Right.
So how will that go on happening? If the economy is not growing, that cannot. It's a cycle. It'll go up, it'll come down, it'll go up, it'll come down.
And you've seen this happen many times.
Always. Across the world.
Okay.
Not only in India, across the world.
Interesting.
Glad you made it till here. If this gave you even one idea to improve your finances, send it to a friend. Helping them might just make you the smartest person in their group chat. And don't miss the full episode on Finance with Sharan. There's a lot more where this came from.